Now on to more market movers with easy to follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Iuorio, and today we're looking ahead to another highly anticipated earnings season. Now, tech had been one of the major stories of 2017, and of course it promises to continue that in 18. Now, 6 of the biggest names in tech report in a 2-day period, January 31st to February 1st. And today we're talking about using NASDAQ weekly options as a way to hedge risk or create exposure to these events. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Last time the FANGs did very well in earnings season as a group. Do you expect that to continue?
Yeah, because it seems like the FANGs can't be stopped, can they? And the market would suggest that expectations are definitely high, which probably means results will be as well, just given the fact that the buying interest out there in the FANGs, the tax is off the charts.
What's the most important read we're going to get? Which company?
I believe it's Amazon still, because Amazon is that leader both when it comes to retail, but also because of the cloud services they provide, my friend, tech.
Well, it's so funny because the same reasoning has me not thinking that, because Amazon is a read on the economy more than it is a read on the specific company. So when I look at Apple and Microsoft, to me, that's going to give me a reading on what's happening in the tech industry, whereas Amazon, the other.
So you're saying my read on the reasoning is 100% wrong?
100% wrong.
Thanks.
Right? Another thing, too, is the tax thing going to come into earnings play at all?
Yeah, it's in a big way, I believe.
Sure.
I mean, I think if you look at the overall S&P, the NAS, you're going to see a nice percentage boost in earnings growth, and then specifically on the sector side,
right.
Certainly.
And that's going to be more on the calls going forward than it is going to be on the actual earnings.
It is, but you're going to start to see a preview of coming attractions with respect to the benefits the tax plan is going to give on these earnings calls that are coming up.
Completely agree. Now, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements are going to vary in the market. Scott.
Yeah, so speaking about the markets, well, that was a really serious look.
Thank you.
Which is funny because, seriously, I was looking at the markets today. This is a really tough period to trade in, I believe. If you look at the NQs...
Because we've been screaming higher forever?
Yeah, pretty much.
Okay.
And then we're getting to the points where, again, we're going higher and higher on these cliffs, and you look over them, and you're like, oh my gosh. And it's just a really tough trade and position to put on, I believe, because of the fact that we're just at these levels that seem to just keep grinding, like you said. So I came up with some creative expression today. And specifically, Jim, I was selling the 6710 straddle. Somebody actually called this trade an iron condor, I believe, which you can fill us in on here. 6710 straddle for 165 points. This means selling a NASDAQ call at 6710 as well as a NASDAQ put at 6710 for 165 as far as what you bring in. You following me?
Oh, sure.
Good. Covering, though, it with, I guess where the condor comes in maybe here, are the wings of the condor?
The wings of the fly.
Thank you, the fly. Thank you.
A put. Right.
Covering it with a call at 6810, which will cost me 39 points, but putting on a protection put at the bottom at 6610 for 49 puts. All my friends expiring on February 2nd. This trade is an underlying currently at 6,700. It risks 460 that you outlay to buy those protection points after taking in the premium, with the potential to make 1540 if it stays within that range that we established with the wings on the fly. Thank you very much.
What you want is for the market to kind of die where it is now. Right?
Well, die is a very strong word, but yes.
Yeah, that would be the best.
But here's the thing. If you look at the charts in the NQ, I'll tell you why it's important to kind of pick those levels. If you look at the breakout, let's say, on the NASDAQ, and kind of where I believe the breakout was and where we could at least have some retracement, it's right around that 6510 level. And if you look at where the market is now, you've got 6710 in play, but then you also have another level that I believe is very important in the 6610, which is the bottom level of that put.
Which brings us right to my trade.
You're kidding.
That exact level. I'm selling the week 4 Jan 6620, 6590 put spread. Now that's the week 4 Jan. It expires before these events happen. And using that to finance buying the week 1 Feb, same expiration as yours, 6740, 6770 call spread. Now the whole thing, you pay 5 1/4 ticks for it. And as underlying 67, even like you said, it risks 705 to make a potential 495. And I know when you look at those numbers off the bat, you say, wow, the risk reward is skewed. But remember that the put spread is much lower away than the call spread is. So it's all about the likelihood of it happening. Now, it's a similar expression. We both think the market's reluctant to go down, but I'm saying I'm hoping it goes up.
True, I'm hoping it goes up, but I almost don't want to totally just outright pay for the opportunity for it to just go up because I believe those are very expensive. And as we looked at the chart earlier, those levels on the NASDAQ where we have the 6,500 breakout and then the 6,600 level, those are levels to keep in mind, like you said, when it comes to creative expression of how to maybe take somewhat of a, like you said, a bullish position in this market, but not go all out.
Last question. Is the Fed going to blow anything by talking tough on rates?
Yeah.
But the question becomes when, right?
It becomes when. It probably becomes later in the year when I think economic data slows down.
Understood. Thanks for joining us on Market Movers. I'm Jim Iuorio, where we're helping to make you a better trader.